Hey everyone, this is a trader investor coming to you live for SPYs before we close the market today. We have about half an hour to go. This is a continued analysis on SPYs, how to find really good entries and exits based on 15 minutes range of the first opening 15 minutes range, and also supply and demand. And today SPYs hit demand zone like clockwork, really like clockwork. We started off today as an inside day. What is an inside day? It's when a bar is within the highs and lows of the previous bar. So today we were contained initially we were contained as an inside day. You know, as you have seen from many of my videos, I don't like trading inside days, but there was something interesting today that kind of helped us see a big move coming up. Two things. One, yesterday we left the demand zone. This is where we dropped and then we formed a base and we rallied, and so in that space there's some demand zone. Institutions that want to go long in this area have some of their orders open and not all are fulfilled, so price is going to come back and collect them. And as you can see in this one bar at the 7 a.m. Pacific time bar, about 30 minutes after market open, that bar went really low. At one point this was a very solid down bearish bar, but it went all the way down almost to the bottom of that demand zone, almost to the low of yesterday, which was the bottom of that demand zone. It went down that far and reversed back up. So this demand zone was drawn on an hourly basis, not on a 15 minutes basis. That's where I like to draw them. That's where I like to focus on. And so when you look at this, is all this wick, price went down in reverse. That's where I draw the demand zone. And if you come down to the 15 minutes, you might be able to refine it slightly. Refine it meaning this is, I like to go at the body of that consolidation zone where the base is formed. That's where I really want to go. But because I drew it on an hourly, slightly higher is fine. I don't expect precision in this drawing. I'm not going to enter a position just because price touches it. So I just want a sense of where that demand zone is for price to reverse. So we started an inside bar, inside day, and then we formed a pin, meaning that we've collected all the buy orders. There were no more buy orders at the bottom of this pin, meaning nobody else was selling. And so because all the selling was done and all the buying was taken care of, they reversed it from this point on. Nobody was willing to sell past the low of this bar. So as price then reverses, you know, I always say for a day trade, look for a dollar move for 43.15, but the previous day's 15-minute range is always my headwind. I always take a look at that. But here's the thing that will help you deviate from that when the right setup is there. What do I mean by right setup? Yesterday we saw a clear supply zone formed, and then price went to that supply zone like clockwork, and it reversed. And it reversed to the demand zone again like clockwork. So price bounced supply zone, demand zone, right? So supply zone, demand zone, supply zone, demand zone. And the next time it hits that supply zone, we know price has gone here multiple times already. So we can be confident that price is going to go through it. No guarantees, but we can have some confidence. So as you enter a position as the pin bar is formed, this is a very good candlestick pattern. As you enter a position and you see this clearly, then you have your stop at the bottom of the demand zone, at the other side of the demand zone. And as price hits the supply zone, you can trail your stop, you know, maybe a little bit better than entry, maybe trail it on the VWAP. This is where the dotted yellow lines are. Some other trailing form that you use, maybe use the low of the next bar. You just trail your stop just to make sure that this is not a very strong reversal supply zone, because we've been there a few times. We've hit it here and we've hit it here, and this is the third time we're hitting it. And the supply zones, the supplies dries out, right? As we hit it more and more times, the supplies dry out. All the sell orders that were here by institutions that did not get filled, when price comes back here, fills them. When price comes back here, fills the remaining. And if institutions, as they see this, they probably have removed some of their positions. Maybe only retail positions were left. Maybe some institutions that kept thinking we're going to go down are left. But then as those supplies dry out, price pushed out in a very, very good way. So that's why I say you can take a chance in a position like this. You can take a risk to take it to the upside. So as price pushes higher and higher, you can trail your stop. And of course, you always have target one, which is in a day trade for me is $1, 443.20 area to 444.20 area. Price sliced through there. It kind of stalled for a little bit around the 444.40 area, and then for target 2 you can go for another $, 445.40, but we're not there yet. So as the end is nearing and the last 30 minutes, I like to exit my position up here. Very, very good day. Very good day because our charts, 15-minute range, I say, this is the high of the 15-minute range is headwind. The mid-range is no longer headwind because we started above it, cleared it, and the high is headwind. However, because it's a supply zone that we've hit multiple times, I can be confident that we're going to get past it. If not, I have a tight stop. And the other thing to notice, the 15-minute range high of yesterday, price at 815 bar stalled there, right? It could not get past it as a close, but momentarily the very next bar closed above it, and then it stays somewhere near it for a while, and it continued to push up. So this was a fantastic day that our setup has informed us. And now here we have formed another demand zone. We have formed another demand zone here, and on an hourly basis we have formed another demand zone. This base here, we rallied, we formed a base, and then we rallied again. So this is the body to the low of the wick for demand zone, the body to the high of the wick for the supply zone. That's how I draw them. And so this is the demand zone. Now price could at some point come back here and do this again, or it's going to go slice through it. We don't know that. We just let the charts tell us. That's why I say do not enter blindly. You wait for price to come here. It gives you some sort of indication that it wants to reverse before you enter that position. And what do I mean by some sort of indication? It's easier to see on a 15 minutes. I draw them on an hourly, but then on a 15 minutes, I see a pin bar. This 7 a.m. bar, if we had gone to the hourly, it is this bar here, because by 7:30, if we want to break the 443.60 area, it's a little bit higher. We would on the 15 minutes, it just gives us a little bit earlier entry. I draw my zones on the hourly. I enter on the 15 minutes, not because I want to monitor 15 minutes by 15 minutes. I just put an alert when price hits the zone, demand zone or supply zone, and once price hits there, I also set up alerts on when the price breaks above this high. And when I come back next time, when price breaks it, if this was a candlestick pattern that I recognize and want to take a trade, that's how I enter my trades. So I don't have to be glued to the chart. I don't have to wait for this 15 minutes bar to close by staying at it. Will it close here, here, here? No, just I know alert here, next alert here, do my business, come back when the alert hits or the next 15 minutes, check it out, and then I have my entry and exit. So this is beautifully set up. This is beautifully set up here, and we have a good entry and exit for today. What a fantastic day. So just like clockwork, our demand zone was hit, held, supply zone hit, did not hold, because we've been there multiple times. Multiple times it becomes weaker. Once it's weak, I don't need that zone anymore in my chart. I left it there for this video so you can see. Now what I have to look at is this demand zone, and this demand zone, if it gets hit again, I'm not interested in it because it's been hit already. So the next time it comes down here, I want to see what price does around this area, and then I will take care of it from there. That's just a clear indication on how price does. So we have the spin bar, kept going, kept going, kept going. This was the zone that was taken care of. So I just wanted to show you how to think about these zones in spite of 15-minute range being headwind. If you wait for this 15-minute range to close above and test it and enter at 443.93, you miss a lot of this move. It's valid, you can still enter it. For 444 to 445, you have your dollar move. Nothing wrong, perfect entry. It fits the standard. I'm just giving you another look at an earlier entry based on the broader analysis. We had a supply zone that was hit twice already, so I know the third time it has a possibility of slicing through it. Plus we're in an uptrend. We don't trade the counter trade anyway. We're in an uptrend, so in a strong uptrend we know the possibility of slicing through it there. That's what happened today. Beautiful setup. So this was my recap for SPY today. Hopefully you have taken advantage of this big move. At least you have taken advantage of the highs broken, the highs of yesterday broken, tested, and price reversing, and you got your dollar move. All right everyone, take care, and I'll see you in the next video.